All right, ladies and gentlemen, I hope you had a wonderful weekend. We got the camera back so you can see me making a couple of changes. So we got an interesting setup today. It looked like I'm making a cooking video, but is it time to celebrate? Is it time to celebrate? They said they got a debt ceiling. I don't know why. This is the only, I didn't have a bottle of champagne. I just had an old bottle of wine. So there you go. But we have a debt ceiling agreement. I'm sure you heard it over the weekend. It is some pretty big news. The futures reacted a little bit, and so did the bond market already too. And now that's going to be the big question this week. What happens now that we have an agreement? Do we actually get the vote to go through? There's still one more step, but mainly now, what are the follow-up effects now that we got the debt ceiling out of the way? We got data this week with the non-farms, and then you got Jerome Powell here in 2 weeks. So, Chad, we got a lot to talk about. I got some plays for you. I got a breakdown of what to expect this week, and then we're going to talk about these repercussions now that a debt ceiling is out the way. Again, futures reacted a little bit, but people are waiting now. What happens now that this is there? Is it going to be positive? Is it going to be negative? I have my opinion towards it, and let's see what ends up playing out. So, Chad, I hope you're ready for it. I hope you like the video. I hope I see you on stream, but today is Sunday, tomorrow is Monday, and we need your help. This is the random account generator, and what we ask on this video is you post a random option trade, post the strike price expiration date, keep it below $100, and preferably with time, because we did have an NVDA, but it ran out of time. But post that below. We're going to do a random comment picker and see what happens, and we need it. We need it right now. So let's go, Chad, but let's talk about this deal now. So like we said, over the weekend, you heard McCarthy and Biden, they have now agreed to raise the debt ceiling, or they have now agreed to an agreement in principle. The only thing left now is the actual vote. The members of Congress, they now have this outline, and they are going to go and vote on it. Some people are saying, oh, well, what if this doesn't go through and there's a last-minute rug pull? It probably won't occur. This was pretty much the big issue, but now let's see what happens if they get it in time, because if there is a delay on the vote, remember that June 1st date, well, on Friday, Janet Yellen moved it to June 5th, but pretty much there's still an element towards when we could run out of money. But for the most part, once that vote goes through, everything is now good to go. And what they agreed upon, they pretty much agreed upon setting the spending limit through 2024, and then to suspend the debt limit until January 1st, 2025, meaning January 1st, 2025, we are probably going to run into this whole debacle and issue once again. So kind of good, kind of bad. We'll see. But like we've been worried about, is America going to default? Probably not. We get this out of the way. And now the next question is, what do the markets do? So we're going to talk about that in a little bit, but to give you the rest of the week now and what to expect, there is going to be a lot of data. And remember, last week we did get some things we needed to respond to, but you're getting real estate data. I think tomorrow you're getting like house prices, you're going to get mortgage applications, a lot of data related to employment. You're going to get ISM manufacturing, ISM employment, ISM prices paid, and then on Friday, that's going to be the big one, non-farm payrolls, whatever happens there. It will probably move things. And now this leads to the final point. We've got the debt ceiling out of the way. If this is going to be good news or bad news, or again, we just don't have to worry about it, is the market now going to respond to what's ahead and then what already happened on Friday? So like I'm saying, we're probably going to get some headlines that will linger with the debt ceiling over this next week. But now we want to know what happens with the post effect. The number one thing we talked about, the refunding. If you didn't watch that interview with Hugh, some people are thinking it won't be a big deal. And there's very good arguments as to why it will not happen or why the refunding won't be an issue. Otherwise, some people are thinking that it's going to affect the bond yields. We've already talked about that. Even right now, as they're talking about the initial signs of an agreement in the futures, we'll see what happens tomorrow, but early signs, the bonds are catching a bid. So that's going to be the first question we're going to hope to get an answer for this next week. The second thing now is, how do the markets react now once we have to deal with this whole hopeful there's probably going to be another rate hike in June. If you haven't been paying attention, the debt ceiling may have been distracting you from it, but in the last week or so, the odds of a rate hike in June have now returned to the dominant, or pretty much it is now more likely based on the Fed futures we will get a rate hike here in the next 2 weeks than not. So just remember, a lot of people thought June was the pause meeting. It's already been a month almost now, and we're getting all these developments, and then now that's the final thing, because we still have a lot of data. And now how will the markets move into response of all the data we're going to get? The non-farms, you have one more CPI, and then you have Powell, not to mention everything else the market's doing. And now how is it going to feel? Will there be exuberance beyond AI, but now exuberance caused by the debt ceiling? That's probably what we're going to find out. So a lot of questions remain. We're going to get that this week. And now what happens is, or what we're looking for, what is the response if we get a deal? So we'll see if there's any issues with the votes. Like I said, I've been saying this pretty much from the get-go. I think there's going to be a temporary positive reaction once we get out of the way. And then I think the markets will start stalling around, or maybe we get more volatile as we try to answer all these questions, or depending on what the data brings in. But overall, we've talked about this a lot. It looks like we have a resolution. We're about to begin again at the middle of this week. We start June, and now it is going to create its own little breakdown. And that's something I had it written down there, but the beginning of the month, the rebalancing, starting getting ready for the new quarter, this will be big. So Chattadonia, I hope you're ready, but let us get into the plays. So I still got plays for you. Don't worry. In the first one, I don't know if you're going to like it or not, but it's NVIDIA and AI, baby. I got NVIDIA, Marvel. We made a flip on this on Friday. They were the other chip company. They reported Thursday coming into Friday. They said their guidance on the AI segment year over year at minimum would double. They went up the most since 2000. There's even like SMCI. They've been killing it in general, but the AI wave is crazy. We're going to see how it plays out into this week. But now over the weekend, or over this long weekend, NVIDIA had a presentation and they released a new set of products. They said it's the new frontier of computing, and they came out with a new set of products to take advantage of all of this AI hype. So going to be watching out for all of the AI names, especially NVIDIA. There's a couple of others. There's some names lagging behind. I think Qualcomm, again, they haven't really gotten caught up in the AI mix per se, but over the last week, it has been all about the chip maker. So we'll see what happens with that. Then the next play, LXRX. I actually bought this after hours. I think I got like 200 shares at like 360 or like 358 or something like that. But they had FDA approval of INPEFA. It's tablets for heart failure. So pretty big news there. A lot of the heart failure drugs have done good, but I kept it small, only like $600. I want to see if we get any of these biotech runners, and that's something here too. We posted it on the member section of the Stock Market Live channel, but there's been a lot of PDUFAs this month, even coming into June, and now getting into the final weeks here, May leading into June. You still got a couple more lined up, so we'll see how all these play out. That's going to be play number 2, and then finally play number 3, Netflix. So we brought this one up and they went crazy on Friday, and I really just think they are at a breakout point from here on out. I think it's very simple. At like 380, I think they start breaking out into 400s. I think even like 415, or they kind of chill out, stall here, and then trade in between like 380 and 360, maybe 340. But overall, I think they're either going to break out or not. But so far, the password news has been somewhat positive in a weird way. A lot of people, I've been waiting. I wanted to see if there was going to be public backlash, but some people are kind of viewing it as a scare tactic. I don't know if you've gotten it on your Netflix already. They probably message you, or if you log in from 2 different TVs, they'll be like, do you want to set this as a TV? Do you want to buy a new account? Or like it says not now. And if you do not now, they're like, okay, well, randomly, we might shut you down. So it kind of seems like they're trying to scare people into making accounts, and then we'll see how that plays out. But overall, it's been good. Wall Street's been liking their approach and finally taking steps towards the password sharing. So we'll see, but it's trading at a wild price. Otherwise, those are the main plays. I think we watch what happens with tech, even names like Tesla breaking out. China is about to enter into a bear market. Remember, they did not get any good headlines. Neither did Europe last week. So we'll see how things play out. We got this big issue issue out the way. Let's see what happens with the bond market. How do people recover from this? And then I think we're going to have our work cut out for us. And after this week, before you know it, it'll be one more week left in the Powell. So if we are going to move, it's going to happen now or never in a weird way. So Chad, I hope you're ready for it. I hope you're locked and loaded, but that is your watch list, ladies and gentlemen. Make sure Hydrate Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember love and intention. You got to balance both of those things. You got to have the right intention and the right love for it. Don't have love and no good intentions, or don't have no good intentions and no love or good intentions. You know what I'm... It's okay. I'm going to give you a feel. It'll make sense. You're going to be locked and loaded. But Chad, you're halfway through now, bro. It's about to be June. I've been saying it. I've been getting ready for it. I've been excited. You've gone through banking crisis. You've gone through debt ceiling. Now the no landing. Sorry, it's not even done. Get ready, Chad. But you're ready for it. You made it. Happy Monday, Sunday. It is Monday. Oh, my gosh. Oh, my. I didn't even say it. I didn't even say it wrong because usually I say Sunday. I didn't even do that this time, huh? Wow, that's crazy. It's already Tuesday. It's going to be Tuesday today. All right, I'm going to see you there. You better get ready. I missed you, Chad. Happy holidays. Don't forget why we have this holiday too, baby. Shout out to the vets. We love you all. God bless you. And I'll see you in the morning. Not too awkward. I think the cooking channel is awkward. I look like I'm in a cooking channel. I can make you something right now. No, I'm going to leave. Okay, horn.